Right now, I'm joined live from Hong Kong by Darius Kowalczyk, Chief Investment Strategist at SJS Markets. Darius, good morning. Thanks very much for joining us.
Morning.
Darius, we had European finance ministers yesterday say potential risks from Dubai were limited. Does that seem to be the global consensus now?
I believe it does. It seems that the Dubai event is going to be one of only local, perhaps regional repercussions, because the sums involved, although large, are not substantial enough to shake the global markets. So our view has been since the beginning of the week that the upward trends in risky assets that have been evident for the months before the standstill announcement will continue in the short to medium term.
You say that collateral damage will be limited to Dubai and to businesses with large direct exposure to the Emirates. So how much collateral damage, Darius?
I think we have to look at sort of two sides. First, Dubai itself is bound to see a slowdown in its growth rate because it will be initially impossible and then more expensive for it to finance expansion through new debt. And we are also having to deal with initial capital outflow from the Emirate and from the region. So that's sort of one side of the damage. And the other side will be banks, primarily British banks, as well as various construction engineering companies that have been involved in the country, and now they will see either direct losses on their credit exposure or decline in revenue from the shakedown.
One potential cloud on the horizon, of course, is the Nakheel December Sukuk. What happens, Darius, if that isn't restructured? What happens? I mean, will there be further damage to confidence, to trust? Will there be further declines in asset classes, not only in the region but worldwide?
If there is no agreement on restructuring and we are dealing with formal default, then there is the risk of various cross-default clauses in other debt by entities in Dubai, and that could potentially send some further shockwaves through international markets. But again, even if this happens, the sums involved are not substantial enough to change the course of global markets, and the size of the local economy is also not large enough to stop the worldwide economic recovery. So again, I would think that while some risk remains and may trigger more volatility outside of the region, I would still be long risky assets.
Has Dubai lost the trust of investors, Darius? I mean, will there be lower capital inflows? Will there be greater capital outflows?
The reputational damage, indeed, is likely to be the factor that will be the longest lasting, because it's the first time that we are dealing with this kind of default where people had assumed implied sovereign guarantee. And now there will be concern about the willingness to service debt, not only in Dubai, but also elsewhere in the region. People will be more wary of committing capital there. So definitely there will be a shakedown in reputation of Dubai, and its ambitions of being the regional financial center are likely to be put in doubt.
Darius, thanks very much for joining us today. Darius Kowalczyk there, Chief Investment Strategist at SJS Markets.